What is good, Tesla family? It's Ray J back with another video, and in this one, I'm going to be talking about the one and only Tesla stock and what you should be looking after for the future. I'm also going to break down why tomorrow is going to be a huge day as PCE inflation is coming out, and we have many Fed speakers speaking as the day goes on tomorrow. So I'm going to break down how all of that could affect the markets, what's going on with the news and data affecting Tesla, and what you should be watching for tomorrow, because many technical indicators are suggesting the market might get a bounce tomorrow or very, very soon. Now, before I break anything down about this, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, whether it's $1 or $100, it's up to you. You're guaranteed 12 free stocks, each valued at up to $3,000. And the best part is, any could be a free Tesla share. It's a limited time offer. The offer ends in just 5 days. Make sure you check it out before they run out. With that out of the way, let's get on with the video. So the market is currently actually a little bit green. We saw Tesla also close very close to my target. I did tell you guys that I saw Tesla basically, my prediction from yesterday was Tesla would get a nice push up in the morning, come all the way down, maybe break a little bit lower into like the mid to low 390s, then get a nice bounce near the end of the day and push very close to 200, maybe a tiny bit above that. And that is what ended up happening. But the real question is, what's going to happen for tomorrow? Now, I want to break down that from a technical standpoint, yes, we have some bullish indicators. I'm going to talk about those in a couple of minutes, but it also depends on what happens with PCE inflation, and that's going to be very huge, and we are getting some red flags about it, which I will talk about later as well. But firstly, I want to talk about one of the things going on with Tesla. There was an article that came out that's asking, did Tesla just leak the design of its new electric compact car? And what's very interesting about this is, this right here is making lots of investors kind of excited, because there's a lot of speculation that Tesla might announce a new car during Investor Day. Now, always remember the saying, buy the rumors, sell the news, because there's no guarantee that that's actually going to happen just yet. I also want to note that historically during Investor Days, they do tend to not actually announce new product lines, but they will likely announce other very important things about their game plans for the years going forward. Now, there is speculation that Tesla may be announcing a $25,000 new hatchback car very, very soon. It is very, very possible, but we have to be very patient and not solely invest based off speculation. But I do believe that eventually Tesla will actually, come out with a car that maybe costs $25,000. Maybe in the future it is possible. I'm not really counting on it in the near term just yet, looking at these current high inflation rates and also looking at how their margins could be affected. But once again, I'm not ruling it out. I'm not saying it's impossible. I just think it's a little unlikely to be announced that soon. But hey, we'll just have to wait and see. I also want to note that Elon Musk tweeted this on Twitter. It's the Cybertruck at the Tesla Engineering HQ, and the new headquarters has been moved for the Engineering HQ to California, part of California near Palo Alto. I think that's an incredible move by Tesla, because they're putting politics aside and doing what's best for the company from a fundamental standpoint. By getting more investors involved, by getting more engineers together, they could actually produce even more productive results. And I think this is a very optimal move once again. I do believe Elon Musk did meet with Gavin Newsom very recently, the governor of California, and they actually talked about this and they did make some big announcements. So that was, in my opinion, something I applaud, because once again, to solve problems, we can't just play politics. We have to do what we can to come to a consensus and do what's best for the world, for our companies, and etc. So once again, good job, Elon Musk. I want to talk about something else that's very good, and that's the Tesla inventory levels right over here. You could see what's happening is Tesla produces a bunch of Model Ys in the United States. They ever since the price cuts, which were right here, they produce them, and then all of a sudden we see the inventory levels drop, meaning that people are continuing to buy Teslas like crazy. That's despite the fact that there is a big drop in demand for used cars right now in the economy, and there is a possibility that Americans may start to save more money than before going forward, because of the higher rates and the pain that should be coming to the economy. Right now, however, at the time I'm recording this, despite all of that, Americans are not saving more money. They're actually depending more on credit, as credit card debt is at the highest we've seen in decades, actually, maybe almost all time and all of history, right? That's pretty insane. I showed you guys the charts yesterday. I just want to note that. And right now, this is technically still good news for Tesla because we're seeing high demand for the cars, and this increases the odds of them meeting expectations. Now, let's talk about tomorrow because tomorrow is going to be a very, very interesting day. Tomorrow, we actually have PCE data coming out. This is the accepted inflationary measure by the Fed. We also have some more personal spending and personal income data, not as pivotal as PCE. Now, when it comes to PCE, year over year, we're expecting it to be at around 4.3% for core, and then about, I think, for year over year, 4.8% for just the normal PCE. Month over month, we're watching for about 0.4%. Once again, they are expecting it to be a little bit about the same, if not a little lower than what we got during the previous year. And this could change depending on what ends up happening. Now, in my opinion, I want to note that CPI was a little hot. All right. PPI was very hot. The previous inflationary measures we got for the month of January were hot. So there is an increased probability that PCE might be a little hot or maybe very close to expectations. I know that this tends to not be as volatile, and this tends to not be as reactive, right? It's measured very differently. So we'll just have to wait and see how this comes out at. But I do want to note one big red flag about it, and that is when you look at the last four bars on my chart, right over here, I can't really hover over them because this weird thing pops up. I'm going to move my cursor, but just look at the latest four bars. You will notice that for core PCE, there's been a decline over and over and over and over again. And that's not how inflation tends to decline looking at historical data. What tends to happen is inflation has these cycles during different times of the year, and there are different moments where we start to see it increase when people least expect it. So I believe we are seeing some evidence that Jerome Powell did not actually tell the truth of the clear sign of disinflation just yet. I think that if you want to call this disinflation, we need a lot more data to come to that conclusion. And right now, we are seeing signs that inflation is starting to tick up. Americans are continuing to spend lots of money with credit cards. Americans are continuing to get into more debt. And right now, the jobs market is nowhere near as weak as the Fed wants it to be because looking at the data that came out today, jobless claims were only 192,000. We wanted them to be at 200,000, which means that there's still strength in the jobs market, once again, incentivizing the Fed to be more on the hawkish side. Many people like Bullard from the Fed are a lot more hawkish, and they're trying to urge the Fed to give us a 50 basis point rate hike in March to get it out of the way. There's no guarantee what's going to happen, but in my opinion, I think that's either going to end up happening or what's going to happen is they're going to give us like three 25 basis point hikes, just three of them for like March, May, and the June meeting. We'll just have to wait and see on that once again. But I'm just trying to put it out there, guys. Inflation is not out of the way, and there's likely going to be more downside for the longer term of the markets for the next couple of weeks. There will likely be more downside, but before that we could see the market try to rally first before we start to see more downside. Let me explain exactly why. Looking at Tesla, the volume today, let me just wait for this to reload so it's up to date. The volume was at about, I believe it's 145 million, a little bit low on volume. So Tesla was not getting a crazy amount of buying pressure, not necessarily abnormal for a Thursday, because I know Tesla tends to slow down on Thursdays and Fridays. The overall short volume percentage ended up dropping by about 49%. It's currently at 49% right now, a bit of a drop, telling us that we did get some buying yesterday, but there is a big shift right here in Tesla because I want to note that just a couple of days ago, I mentioned to you guys that part of the reason why Tesla was outperforming the market is because a lot of the shorts started covering their positions at increased rates. We're not seeing shorts piling in right now, trying to bring Tesla down. What they're doing is they're starting to cover their positions in anticipation of something to be announced during Investor Day. And I do believe this could change once we come like the day before it. I do think there will be some last minute shorting, but right now they're not shorting very hard. They're actually starting to cover more and more as the overall short interest of Tesla is continuing to decline. On top of that, I want to note that historically, Tesla tends to have weekdays on Fridays. It's only green about 48% of the time. And overall, we tend to be slow in the beginning. We tend to speed up as the days go on, as the hours go on. As far as the ratings go, Barclays is still bullish on Tesla. We got some nice bullish ratings. And Tesla still has a high price pairs ratio. This means that we're still outperforming the market. We're still holding up very, very well, at least for the most part. And I think that Tesla does have some potential tomorrow. Now, right now, Tesla was only green about 0.6%. That's because the resistance above 200 is becoming stronger and stronger. But what's good about Tesla is we got a nice close, and we actually closed above the falling wedge-like pattern we were respecting previously. This is telling me that now Tesla's going to start respecting these levels a lot better, and we do have some potential for it to try to push up. Looking at the charts, I'm seeing something very interesting. Now, even though Tesla's not showing me a bullish divergence, it does have the potential to try to continue to push up. I'm looking at the hourly, I'm not really seeing it on the daily. I'm also not seeing it on the daily right now. So we're not getting the same signals we're getting on SPY and QQQ, but I do believe that there tends to be a correlation in this market. Tesla tends to be a positive beta stock, so they could actually increase the odds of Tesla closing green tomorrow. Here's exactly why. I want to note to all of you, SPY closed at 400 today. If we want to push up, we have resistance at 402, then 404. Then after that, we could get to like 406 or so and then fill the gap up there. We have support at about, first there's 400, then there's going to be the 397 area, then there's below that 396 to 395. So which way are we going to go? Here's what I want you to know. We could go either way tomorrow. If PCE is really, really hot, if inflation is too hot, the market could crash. Okay? The market could also rally if PC is as expected and we start to see, the market push up. I want to note that for tomorrow, we have about, what is that, 692,000 puts out of the money with a 1.74 put to call ratio for SPY and max pain at 402. So the market makers are likely going to try to prop the markets up. They're incentivized to do that. That's once again not a guarantee if we do see some capitulation because of a high inflation rate, but it's a possibility. So once again, be prepared for anything, for Tesla, for everything to either go up or go down, okay? But I want to note that from a technical standpoint, the technicals are telling us the market's likely going to bounce and start pushing up. Why? Because we have a bullish divergence developing on SPY. SPY was continuing to make lower lows over and over again, and the RSI was making higher lows, once again forming this divergence. I think the MACD was showing that too. Actually, I'm not seeing it on the MACD, but on the RSI, I'm seeing it. So that's telling me that there's an increased probability that the market's going to try to push up tomorrow and we're going to try to get a nice bounce. And I think that the market's going to try to fill this gap all the way up here if we could break 404 on SPY. Now, always remember that the bigger trend is still bearish. When you zoom out of the charts on the daily on SPY, we're bearish. The market's going to likely take a big hit in the future, start coming down, going into like the next few weeks. But a counter trend rally is completely normal, and I do believe that's very possible for tomorrow, maybe going into early next week from a technical standpoint. Now, I also want to note that if we do get a push up, watch out for the price action. It's going to be very tricky. There's a possibility we could like gap up, push up to fill the gap, then come right back down tomorrow. I think that's very likely to happen, or the market might just try to hold and still close green. It's got to be one of those two. My guess is, if I could give you guys just my guess, I'm going to guess that PC is going to be as expected and the market's going to gap up tomorrow, push up, maybe try to fill this gap. We're going to try to fill the gaps above. Then we get a rejection and the market starts to bleed because of the Fed speakers. And once again, I think I forgot to mention this. We have the Fed speakers tomorrow. Let me see what time. Tomorrow at about, I think it's like 10 a.m., 10, 11 a.m. Eastern time. We have Mester, we have Jefferson, we have other Fed speakers. They might slow the market down. So that's what I'm basically seeing. A nice gap up, a push up, a rejection, then the market to slow down, but we still get a nice green close to squeeze some shorts. That's my prediction. Once again, still be prepared for anything. I just want to make that very clear. For the triple Q, we're fighting some major resistance. I believe we have the potential to try to break out. We also have a bullish divergence right over here developing on the triple Q, on the NASDAQ as well. And I believe that, once again, be prepared for anything. The market could still crash tomorrow, or we can make a big move, but the odds are favoring from a technical standpoint that we're most likely going to see the market push up and try to start filling these gaps. Maybe we gap up, we fill a lot of these gaps, whether it's this one or we go as high as like 304. It's got to be one of those two most likely. Then we start to decline because of the Fed, and then the market still gets a green close. That's going to be my guess. The VIX is also suggesting this because, as you could see on the VIX, we have this gap all the way down here at 19. I believe the VIX is going to likely come all the way down to this 19 area, the 19s. Maybe we kind of gap down on the VIX because the market is going to push up to cause that. Then the VIX comes to the 19s. It gets a nice bounce to slow down the markets. And then later on, going into next week, we see more red next week. Maybe for Friday, we get a green close for like SPY, for QQQ, for Tesla, and etc. And then going into the next week, then we see more downside, right? That's what the VIX is kind of like telling me. Looking at Apple, I'm just going to go over a couple before I end the video, by the way, and talk about Tesla. Apple, in my opinion, is also showing signs of this uh, divergence. You can see right here, Apple came down pretty hard on the hourly time frame. It actually formed this low. It actually doesn't have the same divergence. I'm sorry about that, but it is trying to push up and break this 150 level. There is a chance if it breaks 150, it's going to go for this gap fill, thus bringing the markets up. Maybe the triple Q and SPY go up because of it. It's more likely to do that. Although I'm prepared for anything, I think it's a little bit more likely from a technical standpoint. The dollar was actually just flat today. I think the dollar continuing to hold these levels is telling me that maybe the dollar comes down at a little bit completely normal so the market could bounce a bit, but overall the bigger picture is the dollar got a nice breakout on the daily time frame. It got a nice breakout of its falling wedge, and it's going to continue pushing for 105. This means that maybe the market bounces tomorrow, maybe it does for Monday and it starts declining. Overall, though, we're still in a bigger downtrend. The trend is still a lot more bearish for the longer term. I want to make that clear. Okay, a small bounce is okay for the short term. For the medium to longer term, I do see more downside though. All right, that's what the dollar is telling us. And then the last thing I'm going to talk about before I get on with Tesla is going to be the 10-year Treasury yield. One thing I want to note about it is this thing's a little down around the 38th level. It's a little bit in the red, but I do believe that if it does continue to come down after getting rejected off this key resistance, it's going to likely continue to come down a little bit, helping the market push up, and then it should bounce very, very soon. As yields begin to tighten even more because of the Fed, I think it could bounce maybe starting tomorrow thanks to the Fed speakers. Going into next week, it might continue to fight for these levels, then break out to the 40s. That's going to be bearish for the stock market longer term. So, what am I basically seeing? Once again, I'm prepared for anything, but the odds are favoring a small bounce in the markets for the short term. And then for the medium to longer term, I see more downside, a lot more downside. For Tesla, what's going on with Tesla? It did close very similar to the way I thought it would. And what I'm seeing on Tesla is we're not forming the same divergences, but I am seeing Tesla trying to actually break to the upside. I think there is still lots of hype about Tesla. People are very excited about the fact that Tesla has this big event very soon. Many investors are looking into the idea of Tesla announcing new products, and I think the fundamentals of Tesla are continuing to remain relatively strong. What I'm also seeing is there's a possible inverse head and shoulders developing here that's a little slanted. I'm not guaranteeing it's actually there, but it is a possibility. And the odds are favoring Tesla trying to break to the upside. So I want to note, though, once again, be prepared for anything. If we're bearish, you have to watch 200. If that fails, watch 198, which is where this wedge was. Break below that, then there's going to be 193, then 189 to 187. That's a very big demand zone. So watch those support levels just in case things don't go as planned. But if you're bullish on Tesla, you have to watch resistance firstly at around this 205 area, then 209, then 215, then 220, and then the 225 area, very close to where the moving averages are, the major moving averages. So what I'm seeing for Tesla though is while I'm prepared for anything because of PCE, the odds are favoring that PCE might be as expected and the market might somehow get a bounce off of it, or maybe the market makers just manipulate regardless of what happens just to destroy shorts. So the odds are favoring, in my opinion, Tesla's going to try to hold these levels. I think in the morning, we might see a gap up. Tesla might gap above like 205 or so, try to push up, try to get to maybe 209. That's very possible. And we might get stopped between 209 205, trade a little bit sideways here, maybe get a little bit higher because we do have this possible inverse head and shoulders forming. We could try to tag 210 or so, maybe get a little higher, but then I do see us declining a little bit as the day goes on. And I think that's going to happen because of the Fed speakers. And I do believe that Tesla will still get a green close, but it's not going to just like shoot to the moon instantly, right? We're going to likely get a nice push up in the morning, a bit of a slowdown because of the Fed speakers, then just hold these levels and still get a pretty decent green close for Tesla for Friday, once again squeezing out a lot of shorts. And I just want to note that the options chain on SPY is suggesting that the market makers want the market to hold or even push up to around 402. That's where they want it to close. I'm thinking the market might push even higher than that in the morning, then come down as the day goes on and still close pretty green around that area. I think that's what the market makers are thinking. The odds are favoring that from a technical standpoint. But regardless of all of this, even though that's most likely what's going to happen, in my opinion, still be prepared for anything because we can't always predict the future. We can't always predict PCE perfectly. Anyways, thank you all so much for listening. Have an absolutely incredible rest of the day. I appreciate every single one of you. Tesla to the moon because the long term future is still incredibly bright. And peace out.